Hello and welcome. You tuned in to Buy Now Sell Now. I'm Ankita Saxena and this is the show where we get all your stock specific questions answered in the next 1 hour. So you can keep writing into us on the number that's going to flash on top of your screens. The stock's buying price, the holding period, and we'll get them answered by our fundamental guest and our technical expert both. But before we get going with the rest of the show, we'll quickly take a look at how the market is shaping up at this point. Well, a bit of a recovery that we see coming in. At least for now, a 74 point of a recovery coming in on Nifty. 24,126 is where we are perched at. But nonetheless, we're still in the red. Now, remember, we did see the oil prices that have jumped up sharply after the escalating West Asia tensions. And on account of that, in fact, Brent is now sitting at $85. WTI has also touched $80 per barrel mark. And we also have elevated the bond yields in the US. And that is weighing heavy on the markets. And on account of that, the Nifty is down 0.3%. Nifty Bank also, though, has managed to recover from the day's lows. 180-point recovery coming in on Nifty Bank from the day's lows. But nonetheless, we're still down 1% on Nifty Bank as well. Let's talk about the broader end of the market as well. Mid cap, that's down 0.3%. Small caps also down 0.8%. So it's the small caps are seeing a sharper knock than the rest of the pack. Let's talk about some of the stocks that are in focus on account of elevated oil prices. Look at the oil sensitives, whether it is the oil marketing companies like an IOC, a BPCL, and HPCL. All of them are reeling under pressure on account of elevated crude oil prices. We also have Interglobe Aviation that will be in focus on account of that, whether it pick up the paint names, whether it's an Asian Paints, a Berger Paints, that will also be down and out in trade on account of this elevated crude oil prices. But besides that, if there is, let's talk about other names like HCL Tech, that is also in focus today. Now remember, HCL Tech had come out with its numbers, though they are maintaining their FY27 guidance. They're taking a bit of a knock on the revenue front. It was below what the street was penciling in, and on account of that, HCL Tech is down 3.5% right now. So largely that's how the market is shaping up, and sectorally it's the realty and the auto pack that are taking it on the chin. Besides Nifty Metals and Pharma, the rest of the sectoral indices are trading in the reds. The market breadth is clearly tilted in the favor of declines today. But let's get on board our guests now. Avinash Gorakhshekhar, who's a market expert, and Kunal Bothra, who's a technical expert, now joining us. Good morning to both of you. Thank you so much for joining us to answer all the questions. But before we get going with the show, Kunal, I'll come to you. Another day where Trump is really moving the markets, or the oil prices rather moving the markets. So on the frontline indices, Nifty Bank, what are the levels that we can track for this week?
Yeah, it's been again a torrid start to this week because the markets sort of lifted off yesterday, but again I think yesterday and today were the 2 days where the markets, the Nifty at one point was down 150 plus points at the start. Yesterday we managed to see a good recovery. Today also I think so far it's been a decent day where we've seen a good recovery, at least from the lows where the index tested around 24,000 levels. But I broadly sense that good part of this day today being the weekly expiry, I would expect the Nifty to be in a range 24,000, 24,250. There's been a good amount of option built up both on the put writing side as well as on the call writing side respectively at the strikes of 24,000 and 24,200 for the index. So I would sense that today's action should be more like a ranged pound day for the indices, unless there is a significant change in the second half where you see some correction in the crude oil prices or maybe a fall in the dollar index, etc., which could trigger the markets into a breakout. But otherwise, I would expect the index to be largely consolidated today.
All right, so that's how the markets are moving. But let's get going then with the show. And of course, we did see, yes, the rupee also taking a knock. It has touched, it's actually touched 96 to a dollar, and of course that's also the oil prices and the bond yields are also weighing heavy on the rupee as well. So there's pressure over there as well. But let's get going with the show, and let's get the first WhatsApp question that's coming in from Raghavendra from Karnataka. He's writing in to us with ITC. He says the entry price is 279. What should he do? He's not given a holding period, but Kunal, let me come to you for ITC on the charts. How does it look like for the next 1 year? Is it a hold from your end?
I'll recommend a hold on ITC. I think it's going through one of the worst phases on the charts, on the price trends. We've seen how the last, I think, 6 months, start of this calendar year has been for ITC. Post, impact just in the start of the 2026, where the stock had fallen from 400 levels. I think we are seeing the stock into a more of an extended leg on the downside in terms of price correction. Such kind of instances for ITC historically has actually rewarded long-term investors. So for traders who have a time frame of 12 months to 18 months plus, I think it's a good zone to try and buy ITC. I'd recommend a hold.
All right, hold coming in on ITC. Let's move on to the next question. Nikhil Sharma is writing in from Mumbai. He says he has Grow. The entry price is 206. When is the right time to exit the stock, or is it better to hold on to it? Okay, Kunal, I'll come to you again for this one because he wants to know the right time to exit the stock on the charts. What do you see for Grow? What is your strategy?
See, I would recommend hold over here because after quite a few weeks, the stock is finally trying to regather its momentum. Over the last, I think, 4-5 weeks or so, the stock has been trying to come back into a mild bit of a consolidation. Indicators today on the daily charts as well as on the weekly charts in the previous week had shown a very good recovery for Grow. The base for the stock is at 180 marks. Since you purchased at lower levels, I'll suggest a hold on Grow with a near-term target expectations of at least 220 plus.
All right, let's move on then and let's get the next question answered. Sundaran is writing in from Kerala. He says he has Trent. The entry price is 5,800. What is the future of the share? I'm a long-term investor. Coming to you, Avinash. He's holding Trent. He's sitting at a loss right now. Do you see any kind of a reversal that coming on the trend? Because the revenue growth has definitely slowed down, though the Zudio store additions have been strong. West Side has been a bit of a disappointment there. Do you see a revival coming in on Trent?
Yeah, good morning. See, I think clearly the investor seems to have purchased Trent at a slightly higher level. And I think, unless and until he has a couple of years in mind, it's very difficult to actually talk about any near-term upside because the business update also, which has come in from Trent, has been slightly disappointing. So my sense is, if the investor can wait for the next, say, 18 to 24 months and average at the current level, it is only then that he can expect a decent risk reward. It's a good long-term structural bet. 1 or 2 quarters can be slow, but longer term, the runway is very large for a company like Trent. But I think you need to stay invested for the longer term. And clearly, if one needs to create an alpha, I think you need to take advantage of the current price. Maybe, you can buy in a staggered way, but stay invested for the next 18 to 24 months.
All right. 18 to 20 months, at least you will have to stay invested in Trent. But let's move on to the next question. Matthew John is writing in from Kerala. He says he has Hindalco and the entry price is 1,137. Okay, he's joining us on the live phone line. Hi, good morning, Mr. Matthew John. Thank you so much for calling us today.
Yes, good morning. Good morning. I am Matthew John from Cochin. I am holding Hindalco 150 shares. Purchased at the rate of 137 rupees. So can I hold this share for further to make my loss? Because now it's trading below 1,000 only.
Right. And how long can you hold this, sir?
I'm just purchased 2 3 back only.
Okay. Now, how long are you willing to hold it? Can you hold it for the longer period of time?
Yeah, can I hold it? Because I can hold because I have to make my loss.
Okay, Avinash, I'll come to you. Hindalco is what he's talking about, and the buying price, of course, he's sitting at a loss right now. What should be the strategy on Hindalco? Because Hindalco, even though the metals had started doing well, the shine kind of fizzled out there. What do you see for Hindalco for the next 1 year? Is it going to be a hold from your end?
Yeah, I think the reason Hindalco stock price has corrected is because we've seen a very sharp correction in aluminum prices globally. And I think till maybe the March quarter, I think prices were going up. But after that, there has been some correction in the aluminum price. So my sense is, I would suggest the investor to not panic immediately. He should wait for at least the next 1 or 2 quarters. I personally would think that, aluminum prices would bounce back again post-September. And I think after that, possibly a good bounce could be achieved. From a medium-term perspective, say 6 to 12 months, the company continues to be fundamentally very strong. But obviously, if aluminum prices continue to flow down, then I think he should definitely take a conscious call. But I think for that, he needs to wait for the June quarter. Till that time, I think it's better that he holds on for this investment.
All right, it's a hold call coming in. On aluminium, on Hindalco, I beg your pardon. Let's go across and get the other question answered coming on WhatsApp. Anand Duggar is writing in from Saudi Arabia. He says he has Clean Sciences. The quantity is 1,400 shares, entry prices 1,110, and he wants to know if you should hold or sell. Kunal, coming to you, sitting at a big loss there on Clean Sciences. What should be the strategy?
See, I'll recommend a hold as of now, not a sell, of course, because I think a major part of the correction for the price is sort of happened because from 2600 levels in 2020 to 23, the stock has corrected to almost 750 mark, 700 levels. Very recently, I think the stock in the last couple of quarters made a low of 650 also. So I think a major part of the correction looks to be now behind. My only concern is that the time-wise consolidation could now begin for the stock. So what could happen is for say the next 3-4 quarters or maybe a couple of years at least, the stock could go into a time-wise consolidation before you might see the stock coming back into any kind of a recovery if the news flow starts to be positive for Clean Life. So I would suggest to hold on to the stock as of now. Maybe if the news flow starts to be positive over the next couple of quarters is where you might get a better opportunity to try and average out further so that you can exit at a decent price.
All right, so that's the view on Clean Sciences. But with that, it's time for a quick break. Don't go anywhere. After the break, we'll come back and take your questions on the other side. So stay tuned. Welcome back. You're tuned in to Buy Now, Sell Now. I'm Ankita Saxena and we're getting all your questions answered. So keep sending in your questions. The number is still flashing on top of your screens and we'll get them answered by our experts. Let's resume with all the queries that you've been sending us. Khurshid is writing in from Delhi. He has 3 stocks. Indian Bank, the entry price is 823. PNB, the entry price for which is 111. And Bank of Baroda, the entry price for which is 274. He wants a fundamental view on each. Okay, public sector banks. Avinash, coming to you. He has 3 names. He has Bank of Baroda, he has PNB, and he has Indian Bank. He's a long-term investor and he's parked his money in these 3 public sector banks. What would be your take for the next 1 year? Do you think he can perhaps rejig these names, or are you comfortable and it's a hold on all 3?
No, I think as far as the 3 banks are concerned, Indian Bank has already reported its quarter 1 numbers. I think very strong numbers, Ankita. I think both on the asset quality, on the disbursements, and on the profitability growth. And the management commentary has also been quite good. So here I would suggest him to hold on. I think the next 6 to 12 months look quite promising because the July to September quarter is a pickup quarter. Credit growth has also been very strong in double digits. As far as PNB is concerned, I think, here also the asset quality issues have been sorted out. So I think if he can hold on for the next 12 to 15 months, here also I would say that he can hold on. But as far as Bank of Baroda is concerned, possibly in the first quarter of this financial year, there could be an exceptional kind of write-off, which they have already provided, and therefore the numbers may not be very strong. So here in the short term, the stock may underperform. But yes, longer term, Bank of Baroda is definitely a good bank. But in the near term, it could possibly see a little bit of selling pressure. So my sense is that PNB can be held on, and obviously Bank of Baroda, if he wants, he can exit.
All right. So that's the view coming in on the PSB pack. Let's move on to a live phone query that's coming in. Murugesa Pandyan is calling us from Chennai. Hi, Mr. Pandyan. Good morning, and thank you so much for calling us.
Good morning, panel. I would like to ask about Cupid.
Okay, go ahead. What's the question you have? Cupid, what's the entry price?
I'm holding 500 shares of Cupid. I'm a senior citizen. I'm prepared to hold it for another 5 years.
Okay.
So my bought price was 125. It's almost doubled now. I would like to know what is the prospect. Can I hold?
All right. Okay, so you're already sitting at a profit as far as Cupid is concerned. You're willing to hold it for the longer period. Avinash, would you recommend a hold at this point?
He can hold on. He can obviously, look at booking, say 20-25% profit. But one corporate development in case of the company has happened. The stock has now shifted to the A group. So, liquidity will increase, and obviously you could see larger investors putting their funds in these stocks. So typically, I think, the medium to long-term prospects appear to be quite promising. But since the stock has doubled from his buying price, it's better that he books out 20-25% of his profits and ensures that, his cost of investment reduces significantly. So continue to hold and book part profits.
Okay, he can book 20 to 25% of his profit and perhaps hold on to the rest. But let's move on to Sona Shekhar, who's writing in from Bengaluru. He says that he has WeWork. Entry price is 240. Please suggest on the potential stock. Okay, it's a potential stock and he wants to know the target price. Coming to you, Kunal, WeWorks, he's already sitting at a profit here. What should be the strategy? He's sitting at a good profit here. Should he hold on to it or should he perhaps book partial profits? What would be the strategy?
I would recommend partial booking of profits over here for WeWork. The stock has done pretty well for itself over the last, I think, 2 quarters. It's moved from, I think, a base of 420 thereabouts towards 760, 765, which was the recent high for WeWork. It's been an exceptional run, 50% kind of a jump in the last 1.5 odd quarter for the stock price. Purely in that sense, I'll suggest I think it's a good time to try and book at least partial profits, if not more, for the stock price. And look to rebuy the stock when it goes into a phase of correction. In case if the stock happens to come back towards a mean reversion, very similar to what it did in the month of June, we may expect the stock to head towards at least 650 to 620 range.
All right, so that's the view on WeWorks. Let's move on to the next question. Pratik is writing in from Mumbai. He says he has SJVN and the entry price is 88 rupees. Should he hold or average? He can hold it for the next 12 months. Avinash, I'll come to you. He's holding on to SJVN. What should be his strategy?
No, I think SJVN can definitely be held on for the longer term. See, I think the company has posted a decent set of numbers, but I think in terms of the upside, I think possibly it could take 12 to 15 months. So I think, you need to be a patient investor here, considering the fact that it's not a very, very exciting business, but renewable energy and renewable sectors are attracting a lot of fancy from investors. So taking a 12 to 15 months horizon, he can hold on.
Okay, so 12 to 15 months, it's a hold as far as SJVN is concerned. But with that, it's time for us to slip into a short break. Don't go anywhere. The question and answer continues on the other side. Welcome back. You're tuned in to Buy Now, Sell Now, a show where we get all your stock-specific questions answered. Let's resume with all the queries that you've been writing into us with. Suresh is writing in from Kerala. He says he has Vedanta Oil and Gas. The entry price is 46 rupees. Should he hold on to it or sell it? Okay, this is a tough one because there's very limited price action on that. Avinash, should I come to you for this? Would you be able to take this question? Because I know for a fact that, Kunal, the data is very limited for this one, right?
No, I think, Ankita, this can be held on. Although there has been some profit booking on the stock, I think Q1 numbers, once they come out independently as a separate company, will give better clarity. I think clearly from a medium to long-term horizon, the investor can be rest assured that good amount of money can be made here. But looking at the fall in crude oil prices currently, I think probably the markets are a little cautious. But yes, I think hopefully if the crude price crosses again and higher level, then I think definitely profitability can improve. But we'll have to wait for the Q1 numbers and the management commentary post the Q1 call. So till then, I think the investor can hold on.
Okay, it's a wait and watch as far as the Q1 numbers are concerned. Let's move on to the next one. Kalyan Jewellers. This is, I beg your pardon, this is Kalyan is writing in from Bengaluru. He says he is persistent system. Quantity is 100. Entry price is 4,950. Can he buy more at current price? Interesting. Coming to you, Kunal. He's sitting at a profit at persistent system already. He wants to know if he can average in. Are these the right levels to re-enter again?
I think if you are holding on to the stock, assumingly, or looking for a re-entry, then I think current levels could be a good level where you can look to venture into the stock back again. You might wait for maybe the results to come out, and if in case the stock provides any kind of a dip, post the results. But I would sense that IT is at a very interesting inflection point in terms of the charts, and with a short-term kind of a time frame, many of these large cap and mid cap IT names, they can stand to perform quite well for themselves purely on the basis of the technical charts we recently seen for these IT names. So in that anticipation, I'll suggest a buy on persistent at current levels, and in case if the stock sees any kind of a mild correction going forward, look to add further.
All right, so that's the view, technical view on persistent system. But Avinash, I would like to get your fundamental view also because, like Kunal mentioned, IT is at an inflection point. Do you concur? And would you be looking at the mid-cap IT space like a Persistent or a Coforge, perhaps where the valuations are more comfortable and perhaps more comfortable than the earnings growth itself? Would you recommend a buy on the persistent system?
Yeah, I think from a longer term perspective, Ankita, both Coforge and Persistent look pretty attractive. I think, we continue to be structurally positive on the mid-cap IT, segment. And our sense is that, once the Q1 numbers are out, hopefully after September, once the US order pipeline starts moving fast, you could see a good runway upside in both these companies. So we continue to be positive, but yes, quarter one numbers are awaited. I think we would like to hear the management commentary and looking at the numbers from HCL Tech and TCS, I think definitely the sector seems to have bottomed out and a good amount of value can be generated if one looks at the medium to long term kind of time frame.
So that's the view on the IT pack. But let's move on to a live phone query that's coming in. Mr. Rao is joining us from Hyderabad. Hi, good morning, Mr. Rao. Thank you so much for calling us. Tell us what's your question.
Hi, I have 2,000 shares of Apollo Microsystems bought at 383, and I would like to sell in a short term, maybe in a month or so. What is the target price that I can achieve?
Apollo Micro, Kunal, I'll come to you. He's already sitting at a good profit there. He's sitting at a profit there, and he wants to know for the next 6 months. You said, right? It's for the shorter time frame. What should be a strategy, Kunal? Should he really book his profits, or can he wait for further upside in the next 6 months?
See, ideally, I will suggest to wait for further upside if your time frame would have been slightly medium term to long term. Because what has happened is from the April lows for Apollo Microsystems, the volumes have started to improve significantly. Now, because of that jump in volumes, we can now establish that maybe 300 could be a good base for the stock on the medium term charts. However, since you've purchased very recently, for the stock price, it's trading up by almost 4-5% from your initial cost price. My suggestion would be that if you're looking at this as a short term kind of a play, then you can consider to book profits over here for the stock price and wait for a point where the stock goes in for a mild correction. In the last 1 month or so, the stock has retested levels of 384 times, 3 or 4 times, and that's acted as a good support. So if you're looking to trade as such, then I think I would recommend a book profits on the short-term basis and buy the stock back again if in case the stock corrects and takes support at the 380 levels.
All right, let's move on then to the next question. This is coming from Ron from Mumbai. He says this question is specifically for Kunal. He wants to know what would be the ideal exit price for Tata Motors CV and Tata Motor PV. Time is not a constraint. Okay, he's not given the buying price really, but so let's just take a 6 months to 1 year view of both Tata Motors CV and PV, and what would be your targets, Kunal?
I recommend a hold on both of these stocks. Hold it because Tata Motors CV apparently post the split which had happened between these two companies. I think Tata Motors CV started to look a little bit more better, more stronger on the charts. It seems like that I think the space of 400 is now a very strong support for Tata Motors CV, and it's trying to come back into that breakout every time the market goes into any kind of a stable trajectory on the upside. So hopefully the market texture improves over the next few quarters. You might expect Tata Motors CV to come back towards 500 levels at least over that kind of a time span, say 1 to 1.5 year for the stock. Tata Motors PV, on the other hand, the stock has gone through a major correction. However, I think at this 330, 340 levels for Tata Motors PV, I think a major part of the negative now seems to be baked into the stock price. So the risk reward is extremely attractive over here if you're a long-term investor. Autos as the largest sector has also underperformed, and within autos, I think Tata Motors PV has been a huge underperformer. But we've seen historically that the stock can remain under strong phases of underperformance. But then whenever the recovery happens for Tata Motors, in that aspect, the recovery is V-shaped. So I would recommend a hold on both of these stocks. Tata Motors CV, you can pencil in a target of 500 plus for the next 12 months or so. And for Tata Motors PV, I would recommend 450, 460 as a potential target.
All right, so that's the view on Tata Motors, both CV and PV. But let's move on to the next question now. Sunil Kumar is writing in from Visakhapatnam. He says that he has Reliance and the entry price is 1,300 rupees. He wants to sell the stock to buy energy stocks. Please suggest some for the medium to long term. Avinash, I'll come to you. He wants to sell his Reliance and get into an energy stock. What would be your recommendation?
No, I think clearly, I think looking at the current trend in crude oil prices, I would still say that oil marketing companies are a much better bet. Despite the fact that in the near term crude prices have shot up, I think you could expect good financials from the oil marketing companies like HPCL, BPCL, IOC. So probably he can take a choice, but I think the oil marketing companies can present him a better risk reward in the medium to long term.
All right, let's move on to the next question that's coming in from Mr. Reddy, who's writing in from Hyderabad. He says he wants to invest up to 1 lakh in Maruti Suzuki. Please guide. Avinash, coming to you. Mr. Reddy wants to invest 1 lakh in Maruti Suzuki. He's not given the time horizon, but say for the next 1 year, would you be bullish on the auto pack and specifically on Maruti?
Yeah, I think Maruti definitely has shown good traction in the first quarter of this financial year, and I think we could see better numbers coming in. The company has also taken a price increase, so some commodity increase in costs have also been compensated now. I would suggest that if he wants to invest 1 lakh rupees in Maruti, then it's better that he buys it in a staggered manner and stays invested for the next 12 to 15 months. Definitely, he can think of adding this stock as a portfolio stock.
All right, let's move on then to the next question that's coming in. This is coming in from Kerala, and this is by Jay Krishnan. He says that he has Hindustan Copper and Hindustan Zinc at 540 and 624 respectively for the next 6 months. Should he exit or average? Coming to you, Kunal, he has Hindustan Copper and Hindustan Zinc. Would you recommend him averaging in? What should be his strategy on both?
I'll recommend a hold as of now for both of these names. I sense that there could be at least another 5-7% kind of a further drop down into the stock price before they come back to their respective short-term price support levels. Maybe I think at 7% lower for both of these stocks could be a better point where you may consider averaging out, but as of now, would recommend a hold.
All right, a hold coming in on both Hindustan Zinc and Hindustan Copper. Now let's move on to the next question. This is Gopal Krishna who's writing in from Bengaluru. He says he has CMS Infosystems. The entry price is 419 rupees. Should he sell, hold, or can he average in more? Kunal, for this, again, I'll come to you. CMS Infosystem, he's sitting at a huge loss there. What should be his strategy really?
See, I think his strategy should be to exit because I think the stock has gone through a major correction, and ideally we always recommend that in such kind of a scenario, it's always better to try and have some sort of a stop loss at play. Now that the stock has corrected from 420 levels from your purchase price towards 260 mark, exiting the stock becomes a little tricky. However, in the recent rally for the stock, in the last 2-3 months, there was a move towards 320 mark for CMS Info. So maybe I think at 300 to 320 range could be a range where you may consider to exit. So sell on rallies is what I would recommend for the stock.
All right, so sell on rally is the recommendation for CMS Info. But with that, it's time for a quick breather. We'll continue to answer your questions on the other side of this break. Stay tuned. Welcome back. You tune in to Buy Now Sell Now, a show where we get all the stock-specific questions answered, and we are resuming with all the questions that you have been sending us. First one is now by Vinay, who's writing it from Bengaluru. He's sitting. He has SEM India, and he has the quantity is 1,000 shares, and the entry price is 100 rupees, and he wants to know if he should hold on to it or please guide. He's sitting at a stellar profit there, Kunal. And we always keep talking about how people don't book their profits at profits of almost, 15 odd lakhs. What should be the strategy? I mean, needless to say that he needs to book his profit, but what is the upside that you see on the charts? I'll come for a fundamental check as well then afterwards.
Yeah, I think congratulations to the viewer over here because I think he's managed to reap the entire reward for the stock in terms of holding the stock in terms of a patient uptrend. But I think at current levels of 1600, 1700 range for SEM India, I would sense that the stock is getting into a bit of a frothy territory. That doesn't mean that the stock may not see a further upside, but then at these price points, it's very turbulent because the stock prices can go into any kind of a sudden price, knee-jerk price corrections for itself, and something which the stock has not seen in the last many weeks. In fact, I was looking at the weekly charts, and it's almost like 8 out of the last 9 weeks, the stock has seen a phenomenal upside and a consistent price gain on the last 8-9 weeks. So I think in that sense, there could be a point where the stock may go into a correction. My suggestion will be to book profits.
All right, book profits. Coming to you, Avinash. Avinash, what would be your strategy? I mean, SEM India, it's definitely an outperformer. It's given some 130% returns in the last 6 months. And like Kunal mentioned, it is now entering a frothy territory. Would you concur with that as far as the fundamentals are concerned? And therefore, of course, needless to say that he needs to book his profits. But what would you recommend a hold on the rest of the principal amount?
No, I think, as Kunal mentioned, it's better to book some profit because the profit has been quite significant in a very short period of time. So I think it's better that he books at least 30-40% of his profits. He seems to be holding a reasonably large quantity. And the rest of the quantity can be held on because the order book for the company continues to be good. We are expecting that FY27 will be another good year for the company. And in this situation, if he books part profits, then he reduces his investment cost significantly and his margin of safety improves quite well. So better to book, say, 30-40% profits, and rest of the quantity he can hold for the next 12 to 15 months.
Right, book 30 to 40% of the profits, and of course that therefore your margin of safety therefore improves. So that's the strategy on SEM India. But let's move on and talk about the next question. Krishna is writing in from Bengaluru. He says he has Vinati Organics. The entry price is 1500 for the next 2 years. What's your view? Can he add more? Coming to you, Avinash. Vinati Organics, would you recommend a hold for the next 2 years?
Yeah, I think Vinati Organics is a very large player of making inputs for ibuprofen, and they are one of the players who are fully integrated. In fact, our sense is that over the next 2 years, looking at the kind of growth trajectory, definitely the stock can be held on. But I think it needs to be understood that in the short term, the stock may be a little bit of a slow mover, but in the medium to long term, definitely a good risk reward is possible. So continue to hold.
All right, so it's a hold on Vinati Organics. Let's move on to the next question coming in from Chetan. He's writing in from Dubai. He says he has Ola. The entry price is 60 rupees. Should he hold or should he buy more? Coming to you, Kunal. Ola Electric, what should be the recommendation? He's sitting at a loss, a small loss. But for the next 6 months, what should be his strategy? Should he cut his losses or can he average in?
I'll not suggest to buy the stock as of now. I think the meaty part of the rally for the stock, which had happened the last 3-4 months back, when it moved from 20-22 rupees to almost 45-50 range. I think that meaty part of the rally is now behind for the stock price. We are in for a patch of consolidation or maybe a price-wise correction also. So I'll recommend and avoid. And if you have the holdings, I would recommend that use any kind of a rallies to try and exit the stock.
All right, so that's the view on Ola Electric. Let's move on to the next question. Sanjay is writing in. He says he wants both fundamental and technical view on 3M India. Okay, Kunal, he's not given the buying price, neither the holding period, but what would be your technical view on 3M for the next 6 months to 1 year?
So I think it's a very strong stock as well as a chart. The stock has seen a very good recovery start of this calendar year. It started off, at 30,000 thereabouts for the stock price, and it's moved up, towards 36,000 levels, very close towards now coming back into a multi-month, multi-quarter breakout on the closing basis also. So chart patterns are quite attractive. Indicators are also coming back into a breakout mode for 3M India. I would recommend that if you're looking at this as a 3 months, 6 months plus kind of a time frame, you might consider a target of at least in the range of 38 to 40,000 for the stock.
All right, let's move on to the next one. This is Bharadwaj who's writing in from Coimbatore. He says he has JSW Infra. The entry price is 232. The time horizon is 2 to 3 years. Can he buy more at current market price? Firstly, 2 to 3 years is the time horizon. Would you recommend a hold on this, Avinash, on JSW Infra?
Yeah, I think it is a very strong long-term structural bet, and I think if the investor can keep a time frame of at least a minimum of 2 years plus, then definitely he can hold on. I think we could expect very strong numbers, in the next couple of years. But since it's in a large infrastructure kind of business, one should not look at quarterly kind of numbers, but longer term, I think maybe the next 2 years, if he can hold, he can definitely generate a decent alpha.
All right, let's move on to the last question for the day. This one's coming from Mahasuri, Mumbai. He says he wants to buy Titan, and should he buy Titan or should he wait for some more time? Kunal, I'll come to you. He wants to get into Titan. Is this the right time to enter Titan at these levels?
I think so. I think it's a good time to enter Titan, and frankly speaking, you can never buy a quality stock at a perfect price. But then I think what you can ideally do is that in case if the stock goes into a correction, say like a 5% to 10% correction, use those dips to try and accumulate further. So 4,500 range could be a good starting point for you. And in case the stock drifts down to say 4,200, 4,150 mark, that could be another point where you may consider averaging out.
All right, so that was the last stock question for the day. Kunal and Avinash, thank you so much for taking the time out and joining us and answering all those questions. Well, we'll let you go on that note and move on to the next story. RBI bankers are scheduled to meet today at 11 a.m. to discuss the FCNR mobilization, the KYC bottlenecks and operational issues in the FCNR mobilization. Luckily, is going to be reviewed along with the measures to sustain foreign currency inflows as per the sources. My colleague Ankur is now joining us with a detail of what's really on the cards.
Yes, all-important Reserve Bank of India and bankers meet is underway, and there is going to be a discussion on FCNRB deposits mobilization, which is one of the agendas which is there in the meeting. But more importantly, you would remember that Finance Minister already assessed the situation on Monday, where not only banks but Deputy Governor of Reserve Bank of India was present, and after that, banks did update the Finance Minister about the current situation, about the deposit mobilization, and there has been various centers where this mobilization is taking place, including Singapore, Dubai, as well as UK, whereby there has been a lot of interest which has been garnered due to the attractive deposit rates, especially after Reserve Bank of India has removed ceiling. But more importantly, there is also going to be discussion on the bottlenecks, if any, which are remaining, and that banks will update Reserve Bank of India regarding the same.
All right, thanks, Ankur, for that. Let's move on. PDS is a counter that is soaring in trade today as the company has signed a multi-year SaaS agreement with global sourcing arm of global supermarket retailer. The agreement to focus on the global sourcing and supply chain management. Rabinder is now joining us with details of this deal. Now, that stock is up in a way more than 7.5% in trade.
Well, as PDS Limited is in focus in today's session after company has signed a multi-year sourcing as a service agreement with global sourcing arm of a leading French headquarters supermarket retailer, and under this agreement, PDS will manage textile and apparel sourcing across Bangladesh, India, Pakistan, Sri Lanka and Turkey, with the operation commencing from 1st of November, and the company will provide end-to-end sourcing and supply chain management services through a dedicated operating subsidiary, enabling the retailer with a more agile and scalable sourcing model. And PDS expect to manage annual appearing sourcing of over $250 million under this contract, making its meaningful addition to the sourcing platform. And this partnership will further strengthen PDS long-term relationship with the global retailers, reinforcing its sourcing as a SaaS as a service business model, and expands its global sourcing and supply chain management platform. And remember that in Q4 FY26, management has guided 40 to 50 basis point annual gross margin expansion and 50 to 70 basis point EBITDA margin expansion over the next 1 to 2 years, while maintaining the mid-single-digit revenue growth and targeting around 10% profit growth. And as of early April 2026, the company's FY27 order book stood at approximately 5,074 crore, providing healthy revenue visibility. So back of this multi-year deal, PDS Limited is in focus in today's session.
All right, thank you so much for that, Rabinder. But with that, it's a wrap on this edition of Buy Now Sell Now. I'll take your leave. Thank you so much for tuning in. Don't go anywhere with the markets news coming up next.